To me, climate is the most important problem humanity faces. With software alone, you cannot tackle climate change. We convinced a lot of really excellent European climate tech and general tech founders to devote a certain portion of their holdings to climate tech. At World Fund, we like to invest into climate tech that you can sell to climate tech deniers, meaning you have to build products that stand for itself.
Hello and welcome to VCO2, the podcast that helps you become a smarter impact investor and better climate tech entrepreneur. Today, we're joined by Tim Schumacher, a general partner at Europe's largest climate tech VC, World Fund. In this episode, we'll explore why World Fund invests exclusively in climate tech that can sell even to climate deniers. We'll also dive into the promising trends shaping the climate tech landscape in Europe and get some insight into Tim's career as a founder of multiple software companies. Thank you to everyone listening to this episode, and don't forget to like, comment, and subscribe to the YouTube channel. Or if you're listening on Apple Podcasts or Spotify, don't forget to give us a 5-star review. Thank you so much and enjoy this episode. To kick things off, I think I'd love to hear a bit more about you and your journey into venture capital and how it led to World Fund. Like, what did you do before?
Yeah, so what brought me here? That's I guess always the question when people have been around for a while. And I started as an entrepreneur. I actually started as a software coder. I got a computer when I was about 14, playing around, and then I started coding and coded a lot of software, games, all sorts of things. Went into then designing internet websites, and started my first company right after university, a company called Cedo, a domain company. Ran that for 10 years as the CEO, from 3 friends all the way to 300 people, took it public at the end and ultimately sold it. And then after I sold it, and that was over 10 years ago, I was like, okay, what do I do next? And I then decided, okay, I want to take what I know, namely making companies, building software companies, marketing them, scaling them with what I really think is important. And to me, climate is the most important problem humanity faces. And partially, maybe it's also my upbringing. I grew up, we just talked a little bit about this in the pre-talk. I grew up in Freiburg, which is close to Alsace, on the other side of the Rhine. It's the most probably the most eco-friendly and eco-conscious city in Germany. Was the first one which had a green mayor. Was always very eco-activist. As a teenager, I was demonstrating, for example, against the French nuclear power plant Fessenheim on the other side of the Rhine. Not very successfully. It's still there. I've also, to be honest, I've changed a little bit my stance on nuclear, but on other things, I'm still very much in the same opinion on circularity, on mobility and public transport. Did quite a bit demonstrating, for example, against streets there and those sorts of things. So I was always very, very, very eco-conscious, and I wanted to marry those two things. So for the last 10 years, I've been doing, besides software, I've doing a lot of things at the intersection of software and climate. Ecosia, you mentioned, but also many of my investments, and that ultimately led to me founding World Fund, the European Climate Fund, together with a couple of colleagues.
Yeah, that's very interesting. I think there's a lot to say already about your journey there. But my first thought when I hear that story is like, you've been in that climate / doing good for the environment for a long time. But was there a specific moment in your journey? Like, do you remember any time where you were like, okay, I need to work, like that needs to be the purpose of my career. I need to support the fight against climate change. Was there a moment like that?
It wasn't one moment. I think it was more that it's definitely, I give a lot of credit to Greta Thunberg and the Fridays for Future moment, which 5 years ago, like many of us, I think, woke us up, and it fell on very fertile ground. My childhood upbringing, my values were very much aligned, but to be frank, they were also buried to a certain extent. For the times before, I was always eco-conscious, but also not to the same not to the same extent I've now. So you could say I've radicalized myself over the last 5-6 years, definitely. But it was more of a gradual thing of becoming more. Also, of course, having the privilege of having sold a company, it made me financially more independent than before. And being able to take that money and invest it into climate companies is, of course, different than if you have to make your living, where sometimes it's harder in the beginning.
For sure. And that's very interesting because I think sometimes, not always the case, but sometimes it's easier, obviously, for people that don't have financial constraints to be more climate focused because obviously, like you're not too concerned about paying the rent or like having enough food at the end of the month. So like you can focus on bigger things like climate. I mean, I just answered to your point about like you don't have a specific moment. On my side, I had a specific moment
Okay.
when joining Microsoft Climate Fund. It's called the Climate Innovation Fund, and just working there for 6 months, I was like, okay, it's very interesting all the companies I've seen, but like they are tackling so much problems that we have in the world, which means like we have so much issues to solve as well. And that's when I realized, okay, that's the purpose of my career. I really need to focus on that. Going back to your career and to your journey. So I think I just want to focus a little bit on Ecosia first. Ecosia was a software, a brother and a search engine that you launched, when was it, like 10 years ago or something like that, approximately?
So Ecosia is now more than it's almost I think 15 years old. It's also not my idea. I can't take credit for that. Christian Kroll founded it, but I invested early on, and back then bought half of the company, with the goal of helping the company scale. Now, many years later, we put the company into a non-profit like structure, as part of the Purpose Foundation, so a steward-owned company. But in the beginning, it was a normal angel investment, but with angel investment with a lot of time on my end spent, and I was actually operatively involved for quite a few years, not full time, but helping the company scale. And it's also very adjacent to one of my other businesses, which is the company behind the world's largest ad blocking company, which also lives in the browser and has a different business model, but has also very similar challenges as Ecosia.
Yeah, that's very interesting. I must say, when I was preparing for this interview, I was like peeling the onions, and I was like, okay, he's done this company and this company. Like you've done a lot throughout your career, but I'm curious about like what convinced you in Ecosia when you invested at first and then supported them operatingly as well. Because if you think about the search world, like it's been dominated by Google and a little bit Microsoft, I think, at the beginning, but like more Google for the last at least 25 years. So obviously, like tackling such a big market is very scary, and as an investor, probably like also very risky. Like, what convinced you in their model to join them and invest in them?
Yeah, it's a great question. So what I really liked is that Ecosia, and that really convinced me about the idea immediately, is that Ecosia takes the most profitable business model of the internet, namely search, and wraps it into something which is not filling the accounts of a big Silicon Valley monopolist, but it's actually doing something good with the planet with this money, but with an actual proven business model. Because that's the hard thing. Is very often you find climate companies that have the heart, or climate founders that have the heart at the right place, and they want to build products, but they actually command a climate premium. They say, okay, I buy extra organic, extra climate friendly products, and I pay more for that, and they assume everybody else will do. And I think that's just fundamentally flawed. You actually need to do the opposite. You said early. You said, my favorite sentence is that we like at World Fund, we like to invest into climate tech that you can sell to climate tech deniers. Meaning, you have to build products that stand for itself. So they actually reduce costs. They bring something, and climate is just a side benefit by making things a lot more efficient. Now, with Ecosia, it was almost like that, because the product is free, and so it makes it very easy for the customer to choose. There's really no negative effect of using Ecosia. And so I thought, okay, you take something so profitable, you have no cost to the consumer. It's the lowest hurdle to do something for the climate. Because let's face it, as a consumer, a lot of other things are super hard, like not flying. I try to not fly. It's very hard because I need to get places. I can be very selective, but not flying would essentially like take me out on a lot of things. Eating is also very hard. Sure, like most people, I eat very little meat, and I have a lot of respect for people who eat no meat. But eating is a very cultural thing. It's very hard to transform it when everybody around you is eating Christmas goose for Christmas and things. And you name it, because like a lot of the things are just very hard choices. But choosing Ecosia, choosing it for the planet, is super simple. It's like 2 clicks, you still search, and that's what I liked, and that's what I still like, and that's why I still think, hey, we have a chance, even in this David versus Goliath between Ecosia and Google on the other side.
And where do we stand 15 years later, like in terms of numbers? I mean, one number I'm very proud to say, because I looked it up just before this podcast, is that through Ecosia, you've planted more than 200 million trees, which is like amazing. But what are the numbers that you have in mind, like in terms of that fight? Like, do you think that you won the fight? Like, where do you stand?
No, I think that's the frustrating thing. And yes, we've achieved a lot. I mean, we've planted over 200 million trees. We have every year we have a revenue of about 40 million, and more than half of that goes to tree planting and other climate causes. We've broadened our scope over time. We are also investing considerable money now together with the French Quant by OVH, which is a reputable French search engine, on a joint venture for a European search index, which, especially in these days where you every day you wake up, you read some crazy shit coming from U.S. Elected politicians and some non-elected politicians. It's so important that European resilience is pushed, and search is really important. It's one important component out of many, and that's where we are investing money in this German-French joint venture, which we're very proud of. So we've achieved a lot, but still we are tiny. Like, of course, Google is like 1,000 times bigger, and we ask ourselves why. It's like it takes 1 click. It's the simplest thing everybody can do for the climate. Companies can do this. Companies can sign up for their network. Individuals, every individual can just go on Ecosia, download the extension, or go on their app, on their iPhone or Android phone, download the app. It's so simple. It doesn't cost anything, and yet we're tiny. Is like, why? And it's frustrating.
Yeah, I hear your frustration. I wonder why that is as well. I think maybe just because people are used to other search platform, and also, I mean, to be honest, like there are a lot of, like, for example, if you buy an iPhone, the default browser will be Google, and Google pays like 10 billion or like 20 billion a year
Absolutely.
for that.
Absolutely. That's one big factor, is that Google is very good in defending their position by buying their way into it. And the European Commission has done quite a bit with the Digital Markets Act, with the choice screens. But it's also still hard technologically to catch up to Google, because Google it's a good product. And sure, there are a few little things you miss. If you're a Google user, when you switch to Ecosia, you can always do a double check at Google, as long as you take Ecosia as the default search. But still, it's, as you say, consumers are happy enough, and the product isn't. And that's the thing. For the consumer, of course, the product isn't better. And coming back again on investing into climate, we always need products that are better. Like electric vehicles, they are better. They are more efficient. A lot of other things, we can get into that later. A product needs to be better for the consumer, cheaper, more efficient, improve something, and that's really one of my learnings. As much as I love Ecosia, and I'm continue to support it quite a lot, that's one of my key learnings also for World Fund Investment. We need to have products that are actually better, and if we have those, then that's perfect.
Yeah, that's very interesting. And we'll get into that in a minute because, as you said, like you want to invest in companies that can sell to people, even if they don't care about the climate aspect. Um, but so a few years later, I mean, quite a few years later, you started World Fund with other people in Germany. And I think to get into like a chronological order of what the fund is doing, the first thing was obviously to raise money. And you've successfully done like quite a big fundraising of 250 million euros, which is probably the biggest in Europe so far for climate. How did you do that? Like, who were the LPs that you had to convince? Like, where did you go and find them? How did you source them?
I sometimes wonder about this myself. How we managed to raise actually 300 million euros as a first time fund. So we started off actually Ecosia plays an important role here. Ecosia supported us from the very beginning. That one of the founding moments of the World Fund was the idea, hey, we've done this with Ecosia, and we should not have one Ecosia, we should have 100 or 1,000 Ecosias in different fields. Also, with software alone, you cannot tackle climate change. We need to transform energy. We need to transform food, agriculture, land use. We need to transform manufacturing, mobility, and so we need a lot more. But Ecosia was very instrumental and joined as one of the first anchor LPs. So the Ecosia Tree Fund, where we have money for we have an investment vehicle with Ecosia, which we need because we fund tree planting projects over a long period of time, very similar like a pension fund. So we invest in different things, and Ecosia became an early, a very significant investor and supported us with this and a lot of other things. And then, of course, me and my co-founders, we also put in a lot of money. I put in a lot of money myself because I really believe in our mission at World Fund, not just from a purpose, but also from a profit perspective, because that transformation is needed. And then a lot of other tech investors joined. When we started fundraising about 4 years ago, that was at the height, so it was 21, which was still a very good time for fundraising. And so a lot of my friends and longtime business partners, they saw similar needs. They've had exits, so we convinced a lot of really excellent European climate tech and general tech founders to devote a certain portion of their holdings to climate tech. And that was the initial set of investors. And the great thing is there that we don't just have people for the money, but they're also really good entrepreneurs. So people who've built companies, who have networks, who see businesses, who send us deals, who can help us assessing certain concepts. And so it's a real LP powerhouse we have there. And with that as a basis, and that was roughly about the first 100 million, we went out to pension funds. We went out to the European Investment Fund, which did one of the largest tickets ever in a first-time fund, 50 million euro ticket. Also some other state-owned funds, KfW, for example, BPI France, NRW Bank, European Environment Agency Pension Fund, and many others. And that, together with some family offices and others, then made up the remaining money to come to the 300 million.
Yeah, that's super interesting because you've got a great mix of like former entrepreneurs and some institutional and some banks and some government entities and all of that, which I think is very interesting how you did that. And obviously, I mean, with your track record and your co-founder track record, it makes a lot of sense that people followed you on that journey. But I think even with your track record, people would have been a bit scary at the time,
Yeah.
specifically because climate tech was a bit newer and there was like this clean tech bubble that was uh, completely done from a few years back, and people were a bit scary at the time. So very, very interesting. You mentioned something already about your investment thesis, which is that you invest in a lot of different areas. I would call you guys almost like a generalist climate tech fund as you invest in like different verticals. Why did you decide to do that and not focus on one specific aspect of climate?
Yeah, great question. And yes, that's a fair assessment to call us a climate generalist fund. It's good mix of two terms. So our main hypothesis is that the companies that will save CO2 are in a world where all the companies have net zero goals, all the countries have net zero goals, even individuals. CO2 reducing technologies will win. So actually, reducing carbon is not a lofty impact thing, but reducing carbon is actually a predictor, or one of the predictors for financial return. That's the core hypothesis of World Fund. With that, we've also coined a term and a methodology which we call climate performance potential, CPP. So the question on how much carbon can a technology actually save over the course of a longer period of time. Horizon is usually about 2040. And if we then applied that principle, we actually saw that we need to tackle different areas. And in every single area, whether it's energy, whether it's food and others, there are those technologies that really move the needle, while there are a lot of other things which are important, but they don't move the needle as much. And we decided that we want to tackle this problem really from a carbon angle. We can, and we now have hired experts in each of those fields. We have a great team for energy, for food, and the other things, prop tech, for example. And but we have this umbrella of CO2 and CO2 savings as the core metrics. And there again, even with those fields being different, you find a lot of generalities, and you have a very clear mindset on how you actually select those investments in the first place.
And why do you think removing or like reducing CO2 is a predictor for financial success for companies?
Because if you look at how many companies make purchasing decisions these days, Scope 3, of course, plays an important role, and they make purchasing decisions also partially based on CO2. Of course, it's not the only one. Again, we're back to this question, are we, with any technology, is it also superior in another field, cost, quality, something else? Then carbon is an additional one, but it's a factor that's becoming more and more important. And for that reason, and also the link, and that's, I think, that the link between carbon and energy or efficiency, and ultimately cost, that's almost that's physics. It's basic physics very often. Is the thing, for example, that of course we have a lot of issues still with electric vehicles, how you load them, infrastructure, how the energy is produced, all of that. But fundamentally, we all know that an engine, an electric engine, is 3 times as efficient as a combustion engine. And you cannot rule this out. So whatever you do, all the rest will be solved, and it will gravitate to this 1 versus 3 energy efficiency. And those things will sort itself out with all the issues we have. But if one technology, or the same with heat pumps versus gas heatings, it is fundamentally more efficient. And or take my favorite example is food. It's probably the most inefficient machine we have ever designed as humans is the animal. And it's, I'm sorry if I need to call this a machine, but industrial breeding and food supply with animals is nothing else than machines. I mean, we stuff millions of chickens into big houses and feed them, but it's still utterly inefficient. You stuff 10 times or 20 times, in a case of a beef, of the calories into the machine, and you get 5% out or 10% out. That's the utter definition of inefficiency. So if you can kind of take the animal out, you don't just reduce animal cruelty, you reduce a lot of additional biodiversity and other pollution items, but you also make the whole system a lot more efficient, and precision fermentation and many other factors, many other production things have come a long way, and that efficiency makes it so interesting, because it's not a question, do we want impact or do we want money, but it's actually those two things are totally aligned, and that's the cool thing in investing in climate, is that you actually do both.
Yeah, and that's super interesting, even though like it's a bit sad to have to call animals a machine, or like
It is sad. Yeah.
it is very sad, right? But the thing that's interesting around that is to say that there is basically better system that we can put into place that are not super complicated, right? Like, for example, if you just remove animals from the food chain for humans, you just like save so much of the production that you have to make from an agricultural perspective, which is like very interesting. And I think that's definitely a great argument for why CO2 reduction overall is better from a financial perspective as well. But Tim, we'll get into a section now where we will really talk about the thesis that you guys have. So I would almost put myself into the role of someone that wants to raise money with you as a startup funder. And I want to understand everything from your processes, how you think. So that's where we'll go now. So I think one of the first things you said earlier was the CPP, so climate performance potential. I think that's central to your thesis. And you say, at least on the website, that you want to have companies that can at least reduce or remove 100 million tons of CO2 equivalent every year. I'm curious, how do you assess that early on? Like for an early stage company that doesn't really have a product out to market yet, like how do you assess the potential for this 100 million tons of CO2 equivalents?
Yeah, great question, and it's exactly the question every startup founder should ask him or herself. The early assessment is really a back of a napkin analysis. It is very similar to the total addressable market. And what we mean here is we look at a technology and we say, okay, if this technology would really be super successful and have 100% of the market, how much would that be? And would that move the needle? And I'll give an example of this because it makes it more specific and less abstract. One of our favorite companies in the portfolio doing really well was one company where my co-founder Daria, she came to this with me at over 2.5 years ago and said, I have this fantastic company here, Planet A Foods, not to be confused with a venture capitalist with the same name, Planet A Foods. They have a product called Shoviva, and they produce chocolate, but not made out of chocolate, but out of oats and leftovers from oats through a precision fermentation process. And my first reaction was, well, Daria, where's the climate potential here? What's wrong with chocolate? That was my naive thing. And most people don't think that chocolate is a thing. I didn't know this until 3 years ago. Of course, beef and pork and all of that, but chocolate is innocent. And I learned that chocolate, like palm oil, is one of the main drivers for deforestation. And that, of course, is, I think, on the brink of 200, 300,000 megatons every year is the effect of that. Plus, of course, child labor and supply chain issues and lots of other things not even related to carbon, but even the carbon portion is really relevant. And they have this technology where, with local products, you change this, you produce this product. It's actually very healthy. There's nothing bad in there. It tastes like chocolate, and it's an amazing technological process. It's the founder, the CTO. She has her PhD from ETH Zurich. Has been researching in this field for many years before they started the company, or she started the company together with her brother. Amazing team. They've scaled super well. But my first reaction was also, where's the climate part? And that's what I've noticed all the time is very often there is a climate angle where you first don't think there's one. And in other cases, you think, oh, this is actually good. But then you see it doesn't move the needle. It's good maybe, but it's really not relevant. It won't make or break things. And finding this out, and it's a very simple exercise for every founder. Is okay, what if my technology will really kind of rule the world and would replace another technology? Would it move the needle?
Yeah, that's very interesting because if I summarize what you said there, it's like this company at the time when you invested didn't have much, but the potential for future carbon removal or carbon reduction, if they were successful at replacing chocolate or like part of the chocolate market, would be up to like 200 or 300 million tons of CO2 equivalent per year, which is very interesting because, as you said, like it's similar to the TAM. Like you don't own the market, you don't own your TAM. Like it's just something theoretical for the future if you do well, and it's a market where you will play. So I think that's very interesting as a concept. It's almost like it's a TAM for climate, which I find very interesting as a comparison. Okay, so I figure out I'm a founder. I figure out that I have a CPP of more than 100 million tons of CO2 equivalent. Great thing. I'll come to you guys and I want you to write a check. You said on your pitch deck that you invest in founders that understand, think big, act macro, and build tech for a regenerative world. Can you define those terms for me? What does it mean to be a founder like that?
Well, what it means is that we obviously, as a venture fund, we're out also to make money and make a good return for our investors. Classic 3x on the invested capital, 20-25% return. That's our goal. And of course, for that, we need founders who think big, think outside of a niche, think European or global markets. We're looking for European technologies that have global applicability. We need a European angle as a European fund, but ideally that should be a technology that can then be exported everywhere. And it's a mindset of people, whether they want to be in this world or they just want to be very comfy and solve one niche problem, which is absolutely fine. And to be very clear, VC money has very clear drawbacks. You should not go lightly into the decision to get into VC as a founder. I'm a huge fan of bootstrapped companies, especially in software. That's very, very, very often possible. And it can be the much more comfortable life in many regards, less stress, but you also will stay a little smaller. But in terms of work-life balance, probably much better. But there are a lot of problems which need big money. You cannot go without funding, and you want to be big, and then VC is right. But making that distinction and also thinking, okay, is the founder mindset the right one? Are they tackling the right problems with the right mindset? That's what we're trying to say with this statement.
Yeah, and I think in climate, it's very hard to do without money, or it depends on the type of companies. But I'm thinking, for example, about one of your investment, which is Anafit, which is a company for replacing the way we produce batteries
Yes.
for electric vehicles. It's very hard for them to scale without big money in the beginning, because obviously you have to go and talk to like the big car makers and produce for them, and you cannot do that at small scale with like your own bank account, right? Like that doesn't really work. So I agree with you, like it's great to see people bootstrapping, but like for some of these solutions, obviously like they need more money than that to be able to be successful.
Right.
You mentioned global applicability. I'm curious about, how do you spot a project like that? Like, how do you see in a project that it has a potential for going global from day one? Like, how do you assess that, in a founder and in a startup?
Well, the question whether you can take a product global is one is really the team, and is the founder's mindset global. The way the founder, for example, has experience abroad, has ideally lived in different countries, has an open view of the world, opposed to someone who really is like just in his local city or region. That's a mindset thing, because at the end, the founder will define on what the company is, what the values are, and if it's able to have global aspirations. And the other thing is the market. Is this a market that is nichely defined by also local regulations where every market needs to be tackled one by one? For example, in energy, it's very hard to globalize. In some areas, it's very possible, but then you have also very regional structures. Huge markets, though. If you can build an energy player in Germany or the UK or France, that's almost big enough as a venture play. But it is sometimes in some markets, it's very, very hard to go global. In other areas, it's absolutely normal. It's natural because your product immediately is applicable for the global market. And so looking at those two vectors and seeing how they fit together, and also is there a founder market or founder product fit, which is an interesting term. We always hear about the product market fit, but the founder to product fit is the question: does the mindset of the founder really fit? So if as a founder I have something where I play really in a local energy market, but I want to go global, I might hit some hurdles really quickly. Vice versa, if as a founder I've never lived abroad, I barely speak English, but I want to capture the world, well, it's kind of hard. And again, there's nothing right or wrong with either way. We need a lot of local initiatives as well, and a lot of the heroes also of the energy transition, for example, in solar roofing and other things, are local, inherently local businesses, but it has to fit to the profile of the founder and what he or she tries to achieve.
Yeah, and I would argue that when you were talking about the energy company, I was thinking like, is there really like a European market for energy? And like even selling within Europe is already quite complicated, and going passing the barriers of certain country. Like for example, if you build a company for energy in Germany and just going to France is already like quite a big effort. So I would argue that it's very hard for these companies to expand worldwide. But as you said, the market is big enough anyway, so that you can build a venture-backed company. So now we have like a founder that can go global. They know that they have climate potential that's high. I'm curious about the next step. Like, how do you assess from a technical perspective at World Fund the companies? Because I know you guys have a lot of like support from like third party, from advisors, scientists. Like, how does that come together? Because obviously climate is different to software. You need people that are specific to the topic to understand whether or not the technology could work in the future, right?
Right. No, absolutely. And we do a lot of due diligence as a fund. Of course, we also have a fiduciary duty towards our investors. It starts with looking at the technology ourselves within our team, with the people who actually know something about this. And as I said, we have experts in every field, and so every deal is staffed differently with a one or two or three people who really know something about this area through their prior experience. So, for example, I do the software deals. It's kind of natural because I know something about that world, and then very often I team up with someone who has an adjacent knowledge. So, to give an example, we've invested in a Defion. It's a software company that is essentially you plug an artificial intelligence into a building, and the artificial intelligence kind of magically reduces energy usage, there of CO2, but also cost by about 20 to 25%. I know a lot about software. I don't know that much about buildings, but fortunately we have Daria and Mark who really, they were both at Fissmann, did a lot of prop tech stuff, have really superior knowledge in this field. That would be a thing where this was the investment team, and also is the team on the board. And so that's the way we staff it. But then when we do a DD, of course, we do a lot of reference calls with founders, with employees, with other investors, with researchers. We have our own advisory network to tap into. Those can be our LPs, but also an advisory network. We do reach out to the leading scientists, usually in that field, see, okay, what's the scientific part? So quite a bit of a DD goes into every investment. Then, of course, we share with the founders later, so they can also learn from this. And it's a collaborative process. every founder, of course, knows it's still a lot of work. Fundraising is a full-time job. That's also why you shouldn't go lightly into those things. But overall, it should make you stronger. I've been on the other side as well, fundraising for my companies, and then it's the same thing. It's like it's a hell lot of work, but it makes you stronger. Once you take those learnings, you improve a lot of the things, which also you get as critique back from investors, and also, frankly, you ignore some of the critique. Some critique you improve, other you ignore. You need to pick your balance as a founder, but it makes you stronger because you get really clear and good feedback of people who have a real interest in your company, and that's worth a lot.
Yeah, and I love the scientific approach that you have to due diligence, and like for example, just calling out the lead scientists in the field to verify that the technology can work. I think it's very interesting because it's quite new, I believe, to venture capital to have like this type of experts, or at least like the experts were maybe different before. Let's say that way, because you had experts for software, for example, back in the days, but now they look like scientists ultimately, which is very interesting. To close that chapter on World Fund, the last thing I want to talk about is obviously like what it means to sell to climate deniers, and why it's central to your thesis. Am I correct in understanding that when you say that, you want to say that you want to build technologies that don't have a green premium, that basically no
Exactly.
matter the climate aspect of it, the product is still good. Like I want to buy it because it's financially attractive and all the product is better, or like there's something inside the product despite the climate aspect of it that's better, right? Is that the way I should think about it?
That is exactly the way. There should be a green discount, not a green premium. And there needs to be something where the product cost, quality, durability, something where the climate solution is also the superior solution. Um, and for us, it's a question that's why I always ask it in a very pointed way. How would you sell your product to a climate denier? That's a question we ask to a founder, because it makes, for a founder, it's a good way to think about it. Okay, if climate is not an issue, how do I sell my product? And that makes you also think about your sales pitch and how you refine that sales pitch. And then and that's the thing what we've always noticed, even to people who care about the climate, you want to go with this approach, because the climate, they tick the box anyway. That's why they talk to you. But the fact that they actually accelerate the purchase, they sign on the dotted line, and they also implement you, which is very often, of course, as difficult as the signature is the actual implementation into processes, into purchasing, into whatever. That you get much more buy-in if you have a clear non-carbon thesis, and so that's why it's so core. And every founder, I really encourage every founder to take this as a thought experiment. If I sit across a climate change denier, how do I sell my product?
Yeah, I love that approach because it's also a way, at least I think of it as a way for accelerating the fight against climate change. Because if you can sell to climate deniers, meaning that you can sell to the big polluters of this world, that's really where we can have an impact, right? Like you need to go and talk to the people that are actually polluting a lot today and try to convince them to do things differently and buy your product, as opposed to like talking to people that already want to support anyway the fight against
Yes.
climate change, which they
Yes.
will do no matter your product, right? Super interesting. Well, let's switch gears a little bit. As a general partner at World Fund, you get to see a lot of like the new companies in Europe, and you get to see a lot of like the different innovation. I'm curious, what is your outlook for like 2025 and beyond in terms of like the technologies or like sectors that you will see growing in the future years?
Yeah, so I mean, we could fill a whole podcast with it, in the different fields, from food to energy. But there's one thing I wanna point out, and it's more of a general trend, and we're also writing a white paper about it at the moment. Maybe by the time we publish the podcast, it should be out. And it's the question on what climate tech, how important climate tech is for European resilience. Um, there's obviously, as humanity, we need to tackle climate change, and we need to solve climate change. In the short run, though, we do have, arguably, as much as we like it, a problem with the political instability in the world, with lunatics on the east of Europe as well as on the west of Europe, and frankly also some within Europe. But with those outside forces, what has become really, really clear is that we need to stand our own footings. We need to be able to defend, mostly to the east, but also defend against rogue social media coming from the US, against new nationalistic and also very, very aggressive trade practices. And we need to really strengthen our own resilience in the supply chains, in the way how we procure energy, meaning we should procure energy from the sun and the wind that comes delivered right straight to Europe without any toll, not by neither through Russian gas nor through American fracking. And that's not a question of climate. It's a question of really the power of our economy and our resilience as a continent, our independence. And that, to me, is the fundamental question. And then you can drill it down into energy, into food, into materials, manufacturing, and you find applications for this everywhere. And interestingly, and that makes me hopeful to end with something positive also in this world where sometimes, you open the news and you think like, what the fuck, is you find that a lot of those things, climate and European resilience, are very much aligned, and we should be doing the right things. And they have, again, a positive climate effect, but they also make our economy stronger. They made our trade deficits less. Well, or Europe doesn't have a trade deficit, but they, like, we shouldn't pay billions to very often evil countries if wind and sun come for free. We just need to freakingly sort our things and get our act together to do this. And it's in our own interest to do this. It has nothing to do with ideology or green or anything. It's really in our own interest. And so when you think about this, you drill this down, there's actually a lot of hope in those things. And that, to me, is the one trend that will define things over the next 2 to 3 years.
Yeah, it's very interesting because you talk about it obviously from like the European angle, but I would extrapolate it to like America would do the same, and like other countries in the world would do the same, because they want to have less dependence on the world. And very interesting. I think other trends I had in mind, but we will not have the time to cover them. But some of the things that I think are interesting is like software plus hardware, or like software applied to the real world. And you already mentioned one of the company, the AI company for the buildings. I think that's very interesting. And I think we'll see more of that. Like, how do you apply software to the real world? But we'll get now into the what we call the fire questions. So those questions, you have, let's say, 1 or 2 sentences to answer them. We'll try to cover about 10 of them within the next 5 minutes. Are you ready?
Ready.
Do you think Europe will win in climate tech versus the US?
Yes, I think we will be among the winners. We have a good chunk of the patents, the people, and everything. And it's also not a business where it's one winner takes all. Like we have that a lot in software, but it's more distributed. And I think we'll be among the winners there, and we have to be.
Great. In World Fund's pitch deck, there is a quote from Larry Fink, the CEO of BlackRock, that says, "The next 1,000 unicorns will be in climate tech." Do you think that is true today?
Yes, I think that is still true today, because it is the biggest opportunity, also financially and business wise, we have as humanity. And I think it is still as much true today as it was 2-3 years ago when Larry Fink was still publicly doing this. Unfortunately, they have a bit retracted as well, but I think that's more for tactical and political reasons. But I think it's still very much true.
Yeah, very much true. I agree with you, and I hope at least it's true. So, what would you say to someone that thinks that climate tech investment is philanthropy?
It's absolutely not. I have personally sunk the majority of my liquid funds into, in this case, World Fund, but also some other climate investments, because I believe that there is a disruption, and this disruption of decarbonization is similar big as digitalization. It's one of the big macro trends, and whenever there's something disrupted, there is money to be made. And I alluded before on how I think that carbon savings are a predictor for financial returns. So I think the two couldn't be further away. Sure, there's always philanthropy as well. There are things which we cannot solve with VC money. We need philanthropy for that. But the two things have nothing to do with each other. And we see brilliant venture cases in climate, just like in any other area as well. There's a place for philanthropy, there's a place for software, but it has nothing to do with climate or any other topic.
Yeah, and I cannot wait to see the returns from World Fund, and that would be a great proof against that. If you had 1 billion to invest tomorrow, where would you go invest? Like where? Which sector? Which company?
Well, not one company. I would spread it. I would probably do World Fund too, and just just put it in there and just do what we do, but scale it to, 3 times bigger.
Interesting. You get to see a lot of like the climate issues in the world through your job. How do you stay optimistic with all of the challenges we face?
That's a good question. There are days where I'm not optimistic, and then I think the best is to reduce the amount of news and social media consumption for your own happiness. The parts where I stay optimistic is where I always see how much great technology is out there, how many great founders are also going into that field. The best and brightest minds are in climate these days, and whether those are serial entrepreneurs, new entrepreneurs, and the quality of everything, of the teams, of the pitches, of the execution is massively better than it always was, and that makes me hopeful, because I think the technology is there. It's really more the political will and the will of the people, but it's not that we don't have the things at hand to solve that issue, and that part makes me hopeful.
Great. What are 3 things you've learned as a founder that you use today as an investor? Like, what are 3 things that applies to the job of an investor?
Oh, that's a great question. I mean, one is definitely people matter most. As a founder, as much as an investor, you need to find the right people for the right motivations, and invest into people. And I think that's the same on both sides of the table. The second thing is really trying to be frugal, and all my companies tend to be quite frugal. Like, we're not wasting a lot. Like, just being efficient, being data driven, being efficient, being not crazy. To me, that always helps, and keeps you honest, and also keeps you just capital efficient in whatever we do. And I think that should apply in both cases. And last but not least, I think in both cases you need a purpose. You need something where you have something strong, where you get up every day and is like, okay, I'm going to work for this. And whether you're a founder or investor, you need a purpose on why you're doing this. And that's probably the single most motivating factor, not just for yourself, but also for the people you work with, your team and everything. And you need to have that for yourself. You need to define that, and you need to hire people who buy into your purpose. And that's more important than anything else.
Yeah. And one last question. What are the 3 most important things to be a successful impact VC or climate tech VC in your case?
I think it boils down again to hiring the right people, or investing into the right people, into finding your thesis and sticking with it. Because of course there's a lot of other investments you could make, but narrowing it to having focus is equally important as an investor as a startup. And lastly, of course, being out there and telling your story and convincing other people. Because at the end of the day, as an investor, you're sort of a marketplace. You need to convince two sides, the investors, but also the startups. And you need to do a good job in communicating those things.
Yeah, well, super interesting. Listen, Tim, we've learned so much from you today, from how what fund operates to what you've learned as as a founder before becoming an investor, to your view of the world for the future and how climate tech can disrupt and make a lot of money for investors. I think this was super interesting. Do you have one last word to close this episode?
Well, maybe hope. Let's take one of your last questions. Let's hope. Let's stay hopeful and believe in our own strengths. And to all the startup founders who are out there listening, don't get too distracted by a lot of the bad things out there happening. If we all do our own part in our own solution, I think the world will be a better place, and we should come out with that stronger than before. A crisis is always a good chance. So hope. Let's stay hopeful.
Great. I love the vibe of that last sentence. Where can we find you online if people want to reach out?
Yeah, please feel free to reach out. I'm always open to proposal. I answer any of them myself. Very simple, tim@worldfund.vc, or connect me on LinkedIn.
Great. And who are the one or two people that should be in your seat next, like after this interview?
Yeah, cool. Let's stay in Germany for now because your French network, I think, is strong enough. Let me have two people then. One is both are good friends and do remarkable things. One at the early stage, the other one at the later stage. So I'll start with the early stage. Let's start with Tina Dreimann, founder and general partner of Better Ventures. They're an impact venture group, a lot more in the angel group. They group angels, very smart capital, very, 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 very good people, successful entrepreneurs who bring a lot more than just money for early stage. They're broader. They're not just climate, but also general impact. But climate, of course, is a big portion. And then if we go to the later stage, so even a little later than World Fund, Matthias Dill, my friend from Energy Impact Partners, one of the great funds in climate who's been around the block for a while. So they've seen, for example, also the issues from Clean Tech One. It's always good, if you saw things not go well as well, but they've been one of the ones coming out super strong. He also has a 300 million fund dedicated to European climate tech with a focus on energy. I think both of them would be brilliant guests also for your podcast.
Amazing. Can't wait to have them in the podcast.
And happy to introduce. Yeah.
Thank you so much. I appreciate it. If you like this episode and if you like the show, don't forget to subscribe, like, and comment, or repost, or share it with your friends. I think there's a lot to say about climate change and venture capital. So it was a great interview today with Tim, and more to come in the future. Thank you so much, Tim.
Thank you for having me.